Hey guys, Garrett here, and today is part 3 of my series of how I mortgaged my house to buy stocks. If this is your first time watching one of these videos of mine, I'm making these videos monthly to show you what I'm invested in and basically to analyze how everything is working. I'm going to give you a quick background as to why I'm doing this, show you the stocks, show you what's different from the last time I made a video versus this time, and then give a quick analysis of where I stand so far. If you've watched any of my other videos, you'll probably know that I built a new house. I actually started it in 2016, ended in 2018, but I was able to do it all cash, and of course that was my dream, was always to have a house that was paid off. Well, you get to the end of that, or you get to today really, and you start to think, man, I got a lot of cash sitting in that home. It's just not doing anything. So I went ahead, got an appraisal, and it appraised for $600,000. And I looked at the interest rates, and they were really, really low for a 30-year mortgage. So I went ahead and applied for one through my local credit union, and they offered me a 30-year loan for $200,000 of that. So, you know, I'm only borrowing 33% of my home's value. I'm trying not to get too deep into this because it's somewhat of an experiment. But anyway, $200,000 at 3.125% for a 30-year fixed rate mortgage. That puts my payment at $856.75. So the goal with this whole thing is to get these funds invested so that they will actually make my mortgage payment. And then after the 30 years is over, I've got a portfolio of stocks, preferred stocks, and bonds that should be worth a fair amount of money. As long as the stocks make my monthly payment and have any sort of a residual value at the end of this, it's really a success. Plus, it's just kind of an experiment to see how this works. I'm not advising you to do any of this type of stuff. This is just for your entertainment. You can just watch me. I'm either going to fail or I'm going to succeed, or it's just going to be, we'll see what happens. Here are all of the stocks that I currently own up to yesterday. And today is December 18th, 2020. So this would be through the 17th. I'm trying to get into stocks that have a pretty healthy dividend. So when I figured out what the monthly payment was plus the principal, it meant that $200,000 that I am investing needs to produce a dividend that's between 5 and 5.5%. If I can make that much, I can make the payment and I'm good to go. So I'm doing this with a combination of regular stocks, preferred stocks, as well as baby bonds. Well, if you're wondering what a baby bond is, it's basically a smaller version of a traditional bond. So a bond is traded on the market, and most of the time those are issued at $1,000 a piece. So one bond costs $1,000 once it's issued. The price can vary as markets change, but bonds like that can be kind of tricky to buy and to figure out where you can buy them. And of course, they're in $1,000 increments, and a lot of times they require you to get 3 to 5 of them at one shot. So you have to have a pretty healthy amount of money just to be able to buy into these. Baby bonds act kind of the same way, except at a lower amount. They could be issued at $100 or $25, and actually I have both of those. They are somewhat thinly traded, they don't have high volumes, but the ask spread isn't usually too far apart, usually 50 cents or less, at least of the ones that I'm looking at. And many times I can find these under par value, so if it's got a par value and issue price of $25, I can find it $24, $23. I found them in the teens. So the nice thing about it is it does have a maturity date. It is a bond. Obviously, if the company goes bankrupt, you're probably not going to get anything back on your money, or very little. But I'm looking for investment grade bonds, and so those are usually B rated and up. It can be in the A's also. But as I said before, it has a maturity date. So right now the stock market is really, really hot, and I'm not getting into nearly as many just regular stocks or even the preferreds because they are just overly inflated at the moment. I think there's going to be a correction in 2021, so I'm keeping some of my money back to put in at that point. But regardless, I need to get some of this money invested in so that I can make my mortgage payments. Right now, I'm not bringing in enough dividends dividends to cover my mortgage payment. Only a certain percentage of it so far. So with that said, I'm getting into more baby bonds that are somewhat short term. They could be anywhere from a maturity date in 2021 out to 25, 27, 28. And these are in companies that I'm comfortable with. Here are all of the stocks that I bought within the last month since I made my last video. Even though the market is up, I am still buying some. Again, I gotta make that mortgage payment, and the longer I wait to get invested far enough that my dividends cover the mortgage payment, the less money I have that I can actually put into this. And as a reminder, I'm not looking to day trade or do any speculative stuff like that. I'm just going for very, very safe positions here. Something interesting did happen this month, and it was a stock that I bought. The symbol was MCX. You're not going to find it anymore because it was a baby bond and it was called, but it was a short-term one that was planned out to be a maturity date of January of 2021. Well, they went ahead and called it a little bit earlier. So I bought 100 shares of this. It has a par value of $25. I bought it at $24.50. So it was under par, and I knew it was a short-term hold, but I could get some dividends in the meantime. Well, they went ahead and called it. So I bought it in September, and they called it. The call date was November 20th. So once they called it, they paid me back $25 per share. So again, I had 100 shares of it. I made 50 bucks right then and there. But when I bought the stock, it was before the dividends were issued. It was not ex-dividend yet. So I got a full dividend payment plus the interest from the point that it went ex-dividend to the point that they called it. So in total, I made almost 100 bucks on this in 59 days. So if you were to annualize that as a rate of return, it would come out to a 25% rate of return for the period of time that I actually had that in. That's pretty good. It did give me a bit of a problem though, because then all of a sudden they paid me all of that money back, which meant that I needed to get it reinvested again. I also sold a stock, SCCB, and I only had about 15 shares of it. I bought it at $23.20 and I ended up selling it actually at $25.25. It is not my intent to day trade by any means, but I found a bond with this same company that was offering a higher rate. So why not sell out of it? Not only that, but it was trading at a price lower than where I sold this one. So I bought into SCCC. I bought 100 shares of it at $25.06, and I sold my 15 shares of SCCB for $25.25. Well, SCCB had an interest rate of 7.125%, whereas SCCC had an interest rate of 7.75%. Kind of a no-brainer here. B had a maturity date in 2024. C has a maturity rate in 2025. All right, so let's get into a little bit of analysis of how this all works. I took out a $200,000 mortgage, but I don't have that as investable money because I only got $197,460 of actual proceeds. They took out for taxes and the fees and the appraisal and all of that kind of stuff. So I'm already a bit at a deficit. On top of the stock investments, I also have a $15,000 investment in a company called Ground Floor. I bought one of their notes. It's a one-year note at 8%. So that gives me a $1,200 dividend per year, or you can take that, it's $100 a month. They are a crowdsourced funding for real estate investors like myself. So total investments to date come out to $62,013.17, and that represents 31.4% of the investable funds. That gives me an annual dividend of $3,655.12. So again, the monthly mortgage is $856.75, and the monthly dividend that I have so far is $404.59. So that comes out to 47.2% of my monthly mortgage made so far in dividends. So far I have 31.4% of the money invested, making 47.2% of the payment. So I should be able to get roughly $125,000 invested just like this, and that should make my payment, meaning that anything above that can get invested, and anything that I make beyond that is going to just be reinvested. This is supposed to be a pot of money that just grows and grows and grows and grows. So with that said, make sure to hit that like button down below as well as subscribe. I think this is a pretty cool series, and I think it's going to be neat to see it perform over time. I'll see you guys next time.